Hello and welcome back to Market TV Show. Today we're going to take a look at S&P 500, the stock market on a more in-depth, long-term view, so you can see or anticipate what's to come in the months to years. So a lot of times we get bogged down by the day-to-day, and it's important to look at it long-term, so you can see what the actual big moves are and when the market will give it to you. And you want to be on the right side of that trade, of course. So looking at here, we have a long-term view, right? This is a monthly chart. Every candle represents 1 month. And you can see, if I zoom out, this S&P 500, starting from 2008, we all remember, or some of us remember, this massive drop. That was about 50% drop, and we had the Fed coming in and try to save the market, which it did. And so one thing I like to point out when you look at the long-term view, take a look at how the moving averages were pivotal or key to look at. See how we bounced off the orange, bounced off the green, and even up here too, right? Offered support. And once we felt both, and that was the big sell-off. Keep in mind that these two moving averages are very key to tell you what market we're in. Okay, so after that big sell-off, we reclaimed the moving averages, and we haven't fell below it. Even the the Feb sell-off this year that caught everyone off guard, or most people off guard. Guess where it closed? Like, we had a brief overshoot down, but then we closed right on it essentially, and then we recovered. Isn't that amazing how that this one orange line can just tell you that? So always keep in mind where these moving averages are. I find it very helpful personally. So looking at here, if I draw a trend line here to here to the very tops and to the very bottom, we might have what looks to be a megaphone pattern, where it's lower highs and higher highs, and we could fail in this area and start coming down, right? We can start going higher and start coming back down, and if we fail both the green and orange, then we can have a bear market and testing this 200 moving average for the month. So that could be a possible scenario. Or we could just go, move up and break out of this. Always keep an open mind of what can happen, right? Don't get married to your opinion. Trade what you see, not what you think. So another thing I like to point out, check out the volume here before every big correction recently. Now, recent as in 2 years, we have low volume, low volume, low volume, and then big volume. And then we have had a correction, and then we have declining volume, and then boom, correction. Then we had declining volume, a month of correction, declining volume, and then another sell but weak correction, or within an inside candle, more technically corrective. And then we have declining volume again, and then red volume, and then big red volume came in for the sell-off. And now the month is young for August, and if August continues to show a downward trend in momentum, we might see a big sell-off in September. That's what I project. And you can also see here that prices are making higher highs, right? And momentum is slowing. RSI is making lower highs. When you take a look at the MACD momentum indicator, a lagging one, not an oscillator, you can see a possible lower high here. But we do have this bullish cross, meaning the momentum is still moving higher, and this could go even further up. And then if it fails, then we should start seeing divergence, and we could see a big potential sell-off, or we can keep going up. All right, so that's the very big picture on the monthly view. Now going down to the daily view, you can see we're all out bullish on the S&P. 1, 2, 3, 4, 5, 6, 7, 8 days in a row is green. Currently, more bullish, well, since Friday, more bullish than the Nasdaq here. We're starting to see some rotation of where money's going. Notice how once again failing the orange line, we had to sell off. We're still well above the orange line now, and above the green line, so everything is still bullish. However, as pointed out before, I'm gonna take the MACD off. We have bearish divergence developing where the higher high here and the potential lower high that's forming. And if you take a look at the Elliott wave picture, well, before I get into that, I want to point something that's even simpler than that, or simpler than that. Remember the line we drew up here. So this could be the potential top as days move forward. This could be the reversal point. That's about 3,500 to 3,600, depending on what day we get there. So always pay attention to this. And if we see a big wick, meaning like a candle that has a body like this, right, and a big wick at the top, that is an indication that a reversal is likely. So watch out for a candle like that. And also small dojis too. Small doji, small candles, low volatility candles are usually a good place to get in to a position, the long or short. So looking at that, keep that in mind. And also if you take a look at pivot points on the daily, pivot points are a simple math equation that show you what are the potential pivot points between the high and lows of a given period. So if you take that into consideration, check out how before the big drop we couldn't break R2, the resistance 2, and then we fell down, and then we couldn't break S3, so support 3, and then we came back up. And now look at where we are. We are right at R1. If we break it, resistance 2 is right there at 34, and then where's R3? It's at 35.75, so just above the our line here, the rising resistance line. So I'm gonna keep that in mind. Say put a horizontal line there, put a horizontal line there. Let's keep that in focus. Keep aware. Put that on our charts, and then going back to our moving averages, I'm gonna take off everything now. And let's look at the Elliott wave picture. Elliott wave, real simply, is we go 1, 2. Oops, sorry. How the markets work is driven largely by mass psychology. So the way the gist of it is basically we have the markets goes up in 5 waves like this, and then it's followed by a 3-wave correction. And within each wave, we're going to see mini waves. Now, it's not going to look as pretty as I've drawn it here, but that is the underlying philosophy or methodology of how markets move. And one day I'll do a video, like a long-term view of the Dow Jones ever since its inception, and you can see how Elliott wave has played out over hundreds of years. All right, so it's a very interesting topic. But downside with Elliott wave, it is subjective, and so it's no two guys who are masters at it will come up with the same count, and that's a disadvantage. But it is good for kind of a long-term view and projection. Now I'll show you, and it'll give you like kind of an idea of what's to come as well. So if we look at here, we see this entire up move, and what I see here is this is the first wave up, and then an ABC down for the second wave, and then this long wave back up as the third wave, and then A, B, C for the fourth wave, and then currently in the fifth wave, wherever that is, right? So the fifth wave could end here, it could end here. We don't know where it ends. And then after that, we can have an A, B, C correction. And I'm thinking it's going to be around here. And if this is an entirely bullish count, then we start off again as a 1. All that 5 wave is 1, and now that's 2, and we go for the big 3 on a bigger degree. And so that's really getting ahead of ourselves there, but that could be the possible scenario there. And you definitely want to be going long if it is playing like that, and we'll go after what to look for when that time comes. Okay, so keep that in mind. And one way to also validate, I like to use to validate the different waves, is that wave 3, one of the rules of Elliott wave is that wave 3 is usually the longest. And so if I pull out this Fibonacci extension, you can see wave 1 is this length, and wave 3 is, you can see that, is 1.618 of wave 1. So another way to look at it is about 60% longer than wave 1. So that is the typical place where wave 3 ends. So that's why I'm confident that this is the count. And then after you submit that this is wave 3, we can measure from wave 2 to wave 3 on a Fibonacci retracement tool. And you can see here we've retraced almost to 0.382% here, and then we bounced off the 200 twice, and then now we're moving up. And you can see how, so curiously, that negative 0.236 is lining up with our pivot point that we mentioned earlier, and negative 0.382 is right at our upper trend line, and the pivot point is right above. And so keeping all that in mind, even if you are bullish and we have another few more years of upside activity, this is not where you want to go long. This area here is a supply zone. Is where people are going to take profits, wherever this area is. And most likely we're going to have a correction like that comes in 3 waves. If we see a much bigger correction, then we know then we're working with a different Elliott wave count. And so this whole count is wrong, and we have to rethink everything. And that's the trouble with Elliott wave 2, where it could be very time consuming trying to figure where we are in the count. But still, in my opinion, very useful, and definitely worth taking a look at, and especially big markets where a lot of people participate in. Okay, so let's take that off. Let's take that off. And let's take that off. So moving into this coming week, nothing but bullish activity that I could see. We might have a pullback to the green line again, the 20-day moving average for support. If we don't get support, we'll most likely get support on the orange line, the 50-day. If we break, then we have a problem, and we should look to short, but also keep in mind the 200-day is right here. So most likely the big money people are going to keep it going higher until we get to a place of sort of a euphoria where, oh my God, S&P is reclaimed the highs before the big sell-off in February. And so everyone will think everything's hunky-dory. We're back on buy mode. Everyone's retirements are great again. But just before everyone thinks nothing can go wrong, you'll have a big sell-off that no one in the mainstream media will anticipate coming. And if you take a look at the put to call ratio, I'll put that in a line chart for you. It's easier to see. And you can see that this is the amount of people buying puts in the options market versus calls. So the lower the number, the less puts there are in opposed to calls. So if you're buying puts, you're bearish. You're buying calls, you're bullish. And so take a look at 2008, right? The big sell-off we mentioned earlier. The put to call ratio was about 0.57. And every time we get to these levels, we most likely have some sort of correction. Look at where we are. We are at the bottom of the range, and we're wicking to the bottom. And if we continue to have bottom readings, we can even, that's an indication that a big correction is coming, and then it's going to drive it all the way back up, where people are buying puts. And then we can see up here. These are the areas to go long in a market, like the big sell-off in 2018, right? And then recently in February, the sell-off here. A lot of people were buying puts and the market reversed. So the market likes to do what the masses don't think it will do. So keep that in mind as well. Keep that on the lookout. And I think that is it. Let's see. Let's go back to SPX. Turn this back into a bar chart. Oops. Wrong bar chart there. Okay, so here we are. So keep that in mind. We are still bullish, and let's see if we could on this. Sometimes it's good to look at a naked chart and see. So that will be a trend line there. Connect the tops. Although there's not much we can do on the trying to draw a resistance line here. There's not much we can do here. So you see how I'm struggling to find a good resistance point. I will make a video about trend line drawing. What's a good trend line and how to draw them properly, in my opinion, of course. But as of now, I don't see any good resistance trend line on the daily. That's why this trend line is the most important trend line right now. Keeps the momentum up. And once we start breaking down and we see a daily close below the trend line, that will be your sell signal to get out of your longs and maybe look for short positions. All right. If you like today's content and you found it helpful, please click the like button, subscribe, share the video. It will help me a lot. It will encourage me to do more of these videos where we do deep dives and more markets. I look at a lot of markets, and I don't really get to share as much as I want to because I spend more time trading instead of making videos like this. So have a good trading this week. Make sure to keep it safe and make money and be happy. All right. See you later.